If you've recently lost your job, this quick tip may help you with managing your cash flow in this very uncertain time. You may or may not be aware that credit card providers offer what is called balance protection insurance. And it's not uncommon for people to have this insurance when they don't even remember signing up for it in the first place. So if you have lost your job, it doesn't hurt to check to see if you have it. And if it turns out you do, you may want to make a claim. What is balance protection insurance? It's a special type of insurance policy which will cover some of your monthly payments required in the case of job loss. And in other cases, it can pay a lump sum amount against your credit card balance if you become ill or die. Every policy is going to be a little bit different across the different credit card providers, so you'll have to check the fine print of your policy. Here is an actual example from a policy, and we'll take a look at some of this fine print. If we look under the involuntary unemployment section, we see that there is a 30-day waiting period. That means that you need to wait 30 days after losing your job before you can start to receive benefits. That's pretty standard. Then we see the benefit is that a monthly payment amount gets paid to your card for you, and in this case, every month until you return to work, or the amount of balance that you carried when you lost your job is paid off. And that means that any new balance added after you lose your job is not covered, or until the total amount of payments they make add up to your total eligible coverage amount. And in the case of this particular policy, that amount would be $25,000 as a maximum. Now, we have to do a bit more digging to find out what the actual monthly benefit amount is. And when we do dig around, we find this section here, and it says that the monthly benefit is equal to the greater of $10, which is not a lot, or 10% of your balance outstanding as of the date of your unemployment. So if you owed $5,000 on this card, you would get a monthly payment of $500, and that would be paid for up to 10 months. So why 10 months? Again, in this case, 10 months times 10% equals 100% of the balance owing at the time of unemployment. So this monthly benefit would continue to be paid for a maximum of 10 months in this case, or until you return to work. So if you return to work after 5 months, you'd only get 5 months of this monthly benefit. Again, policies differ, so read your policy's fine print, and you should be able to access that relatively easily online or by calling the number on the back of your card and getting the details over the phone. Now, normally, it usually doesn't make sense to have balance protection insurance on your credit card, if especially you don't carry a balance, because premiums still get charged because they're charged based on your average daily balance. So what that means is you pay a monthly premium, the cost of the insurance, if you use your card, even if you pay off the full balance every single month. But again, I've noticed that a lot of people do have this balance protection insurance because in the past, it used to be sold very aggressively and sometimes not transparently. And if you did carry a balance on your credit card, you may have been tempted to sign up for it, as it's still marketed very heavily to credit card clients all the time. So if you do have it and you just lost your job, make a claim.